Hey folks, here's some breaking news. Stablecoin Act was signed last week, and this means really that many stable coins will actually be banned from doing business in the United States and be part of potentially your wallet. So which stable coins will actually be banned? You're talking about USDT, which is tether, is widely viewed as opaque. They have reserves not only in the US dollar, but they also include Bitcoin and corporate debt. It doesn't qualify as liquid treasuries that are required by the Genius Act. As a result, it's unlikely to become as a permitted payment stablecoin issuer, and then it would face exclusion from the US unless they change something. But we can expect some massive disruption in the stable coin and the crypto market because of that. Also, DAI is a maker of maker DAO, so it's a decentralized reserve-backed crypto asset, but it's not issued by a regulated entity, so it's not compliant with the one-to-one backing requirements that we need for the stable coins, the USD stable coin. So likely it's going to be treated as a non-compliant stable coin, so it would face banned status unless MakerDAO restructures and change their change the structure so that they are compliant. And then you have a whole bunch of other non-registered or foreign coins. Any stable coins without US license or certified foreign equivalents will be banned from the US exchanges and wallets. So if they want to do any kind of exchanges, they're going to be in other types of exchange, non-US exchanges. So this includes smaller US projects and offshore tokens pushing functional dollar-pegged coins, but they're not a one-to-one backing necessarily. So in this channel, we break down what happened, why it matters, and what you should do about it. So just let's dive in. For those of you who don't know what a stable coin is, it's really cryptocurrency that is, or a digital asset that is pegged with the US dollar. Unlike Bitcoin and Ethereum, the value of a stable coin doesn't fluctuate the same way. It fluctuates in terms of the purchasing power, as the dollar can be devalued against other currencies, but it's always going to be one USDC is going to be equal to one US dollar. So it's designed to be stable for use in payments, transfers and settlements. In fact, one of the projects that I had called Martel Invest, where we were using these USDCs as a form of payment to really, when people were investing into our projects, their funds would be converted immediately into USDC, so that it would always be, there would be an equivalent with the US dollar. So let's look at the article that came out here, because there's a lot of more flavor. So the article here is with Politico. It says "Put up or shut up." Really, so there's a lot of ground to make up before that long-sought payments revolution can be realized, because just 2% of US adults are reporting using crypto to buy things or make payments of any kind. Only 2% of US adults, right? So the passage and enactment of stablecoin legislation would be a seminal moment, a very important moment, not just for crypto, but for payments and for the financial system. So this is a quote from David Portilla, a former Treasury official and partner at Davis Polk. Kicking off the biggest test yet, whether the industry can become the financial disruptor that it aims to be. We've been talking about crypto as being the financial disruptor, where you can, for the last 15 years, and how people are going to be using this everywhere. But it really had never materialized. It's been used mainly as a way to scam other people from other countries, etc. So a blockchain-based utopia that offers a high-speed way to save money, invest, and pay for everyday expenses. That never happened. That was the utopic goal that they had, but that never materialized. I guess they dropped the other one about being the privacy aspect of it. Now it's not as private as it is, because now we can trace all the funds going pretty much anywhere. But the industry's ambitions have faced repeated roadblocks, including until now a reluctance among policymakers to legitimize it with new tailored regulations. So now we've built this the Genius Act. So this is a positive thing, in my opinion. We'll see if that's going to change anything in terms of adoption for millions of Americans and millions of people worldwide that want to have a better form of payment. So a crypto executive called it a put up or shut up moment. So here's the regulatory clarity that you were asking for. Now just make it happen already. So Trump signed the bill into law last Friday, touting that what an immense promise for the dollar-backed stablecoins that's going to be. So success in getting more consumers and businesses to use digital assets could send the lofty valuations of crypto skyrocketing even more. It has gone up and up and up over the last few weeks. As we're approaching this date, it's not certain that this is going to continue, right? There's a lot of industry skeptics around. I am one of those industry skeptics because I've been waiting for 15 years for something to happen. I was involved in NFT, I was involved in digital assets, just never happened. When we're talking to investors to invest in our projects or to do certain things or have like digital shares, people are always like, why are you doing crypto? Why aren't you just using just regular dollars? Like, why do you have to complicate things? And this is exactly what happens. It's just up till now, until we see what's going to happen in the future, it's just very, very complicated for most people to do any kind of transaction in crypto world. So Trump himself once called crypto a scam for becoming such a believer that he and his family are now active participants in the industry, which means that they're really going to benefit a lot, billions of dollars that they're going to make because they have their own cryptocurrency and they also have a meme coin. And then so now that they're part of the scamish nature of crypto, now they're happy with that. So their crypto is called World Liberty Financial. It was launched this year, and now of course he's all happy to do that. So his entire family has crypto. His family is going to make a shitload of money doing that. So I don't think you can create a regime and then things magically happen. Said, this is a quote from Graham Steele, who served as Assistant Treasury Secretary for Financial Institutions during the Biden administration. There's a lot of challenges that crypto as an industry has had the issues with the technology, the use case themselves. You know, they kept talking about how easy it would be to use, and it's not easy at all to be using these technology. Just creating a regulatory framework is not going to make a lot of these practical issues go away. Stablecoins like Tether's USDT are the largest combined global value of more, but USDT, as we mentioned, Tether's is not one-to-one backing, and so they could be in trouble. USDC, on the other hand, is pretty much a one-to-one backing. Help resolve transactions faster than the middleman-filled payment system of today, where purchases need to work their way through a web of different banks and financial institutions. This is true, especially if we do like international transaction or 24/7. You need to do 24/7 transactions. But for the most part, I mean, we have other solutions out there. Doing a wire is really not that complicated at most banks. You have to pay a certain amount of money. You have to pay money also for cryptos whenever you want to do anything with them. You want to look at them, you want to move them around, you want to flip them, you're going to have to pay some fees to do anything with these cryptocurrencies. So that could provide a retailer's new way to avoid hefty fees that pay. They've been talking about this for 15 years. And when I was doing it, that has more fees than ever before. And the fees would change depending on what time of day it was. And by that, I mean literally what time of day it was, how much traffic was on a network, and then they would have different fees. That's it. There's a lot of people that are trying to do something right now, so we're going to charge triple or 10 times more in fees because of that. Of course, you have big players like Bank of America, Citigroup, Morgan Stanley that are also looking at how they're going to be involved in this. For critics, they remain a major concern given their role in the illicit finance, what they see as lackluster consumer protection. So even among supporters, there's a question around what Steele, the former Treasury official, called their cost and accessibility issue. So for the regular consumer, there's a whole accessibility issue about how easy it is to work. I mean, we still have people here in the US that don't have access to the internet, for crying out loud. And now we're going to launch a stable coin. So what is the purpose of that Genius Act? It's designed to bring clarity, consumer safety, and financial stability. So I definitely welcome that because until now, the digital currency in general was really the Wild West, right? We want to prevent crypto collapses, like FTX, we all remember Sam Bankman-Fried, and what just basically do whatever he wanted with your money. Now it's going to be restricting the one-to-one backing, so one stable coin with $1. And there would be a clear path for regulated banks and institutions to issue these digital dollars. So not everybody can go and say, I'm going to start that. You will have to be certified, basically stablecoin payment provider. It's just going to shut down a lot of the shady and foreign stablecoins. So this is what I'm saying, like really look at what you're holding. If you're holding any cryptocurrencies, make sure that you really pay attention to that. There was also a lot of speculation about, does this kill the digital dollar? So we had talked about the CBDC before, that the Federal Reserve wanted to launch. And I know there's kind of a fight right now with the Federal Reserve in the White House, but this bill does not prevent the Federal Reserve to issue CBDC. It doesn't ban it either. So it has nothing to do with that at all. There's going to be other legislation that are going to do that. So why would a company like Circle actually create a USDC? Well, it's because they make money at it. But does this bill, the Genius Act, does that remove their ability for them to make money? And the answer to that is no. How does the stablecoin providers make money? So they earn interest on the reserves backing the stablecoin. They pay the users nothing. So every time someone buys $1 in USDC, Circle takes that $1 cash and then it gives you basically a 1 USDC stablecoin. Circle doesn't just put that in a bank, right, in a drawer, in a sock drawer somewhere. It buys typically US treasuries, or it buys some kind of other cash equivalent. So the law is very specific about what they can invest in, where they can store it in as cash equivalent. For each one, they have to be one-to-one matching. When you invest in these short-term US treasuries, you actually gain money, make money. So these yields could be between 4 and 5% right now. This is how much USDC or Circle, the company that owns USDC, how much money they're making. The users get nothing. You as a consumers don't get anything, and Circle keeps the rest. The thing is that the Genius Act registered you as a permitted stablecoin issuer. So not everybody. So Circle would certainly be one of those big players that will be a permitted stablecoin issuer. You have to keep the reserves in only government-approved assets. And now they make it a legal requirement that you cannot pay interest to users. So that's really going to prevent any kind of like competition when someone wants to go and pay interest. So what happens to the existing stable coins? So USDC, probably going to be the easiest one they're going to go through, but USDC is going to have to become compliant. So it's become a permitted payments stable coin issuer. Tether is in serious trouble. It's based offshore, will likely be banned from use in the US unless it's kind of completely changed their structure. Then the DAI, depending on how it's backed, so how they back these stable coin, that would have to change. They would also have to change their structure. Both of these would have to become compliant. So the compliant coins will survive and dominate. They still have to be a permitted payment stable coin issuer. And maybe they're going to have a PPSI, an acronym for that. So they have to get license. They have to make sure that there's a one-to-one cash backing or short-term security. They have to publish monthly attestations. They have to make sure that they follow AML and KYC. So this is anti-money laundering and know your customer rules. So they want to make sure that whoever is going to get these USDC coins, they're not doing this for money laundering. And we know who is playing that. They can't offer a yield on these stable coins. So if they are doing that, they're going to have to stop doing that. This gives regulatory players like USDC a huge advantage if they comply and they become certified, but I don't see why they wouldn't be doing that. Non-compliant coins would just be banned. All the yield-bearing stable coins will die eventually, or they're going to have to be kind of outside the regular exchanges. And then we're going to see a global fragmentation on stablecoins. So we see a massive shift in the stablecoin industry. We're going to have a bunch of compliant stablecoins that will dominate the US market. Other markets, they may do something different. These, for example, the offshore stablecoins, they may do may continue abroad, but they won't be used into U.S. market to do business in the U.S. market. What should you do about this? So there's really a couple of things. So if you're just thinking of converting your US dollars to USDC as a stable coin, just for the purpose of protecting your capital from the decline in the dollar to protect against inflation, well, it's not going to work, because really your dollar is going to be pegged with a dollar on the other side. So if the value of the dollar is depreciated, then your USDC coin is also going to be depreciation. It's going to have the same purchasing power. So it's not going to change anything. If you need stable coins for transaction, to make transaction easier because you're doing international transactions, you want to have control of your funds, then it makes sense for you to convert your US dollars to stable coins to do these transactions. Now, if you're looking to take advantage of this Genius Act by doing some kind of investments, so I would look for the biggest winners in the Genius Act and potentially invest in them, right? You can also look at the losers and say, well, these are the losers. I'm going to do some puts on these users. But look for like regulated banks and financial institutions that are going to get involved into this. So JP Morgan, they already have the JPM coin. Look at some other banks that Zelle, SoFi, that could also, the fintechs kind of like, they're already kind of like very technically savvy, and they could potentially get into that more heavily. Circle obviously is a good one. Now, US Treasury and Fed, this is something that's interesting. So now, if the amount of money that's invested right now in the USDC, so this could be the subject of an entirely different article, but if the USDC grows rapidly, this means that they're going to have to invest that money into short-term treasuries. That means it's going to increase the price, the demand for US treasuries, and also increase the price for short-term US treasuries, which means it's going to lower the yield. Lower yield means lower interest rate. So this could be a big push here for lower interest rate, lower short-term interest rate, if there's a big surge in people going into USDC, which might happen because, you know, they're going to move away from USDT potentially and some other US dollar pegged coins that are not going to be permitted to work in the US. So everybody that's using that, they're going to move their money into USDC and convert them. So there you go. So CBDC is not authorized, so that's fine. Anybody that's involved in the auditors, compliance firms, legal advisors, so if you have any kind of business doing these things or you're interested in doing business doing that, there could be some potential here to make that kind of money. And then any kind of enterprise fintech integrators that can help businesses adopt compliant stable coins for payroll, treasury, cross-border payments. This is an opportunity to kind of like get involved in that game. So examples of winners, for example, would be Stripe, Visa, Coinbase Cloud, etc. So this is a massive, the bill is actually, the act is not really that big, but it is a massive move for the United States to actually certify or establish more credibility in the stable coin. So this is one of the most aggressive moves that was done by the US government to make it real. Now I'm going to go back to put up or shut up. Now that you have this clarity, now that you have this bill for the stable coin, now we'll see how they can promote that, how they can make it easier for consumer to actually use these in actual transaction, not just speculation and scams. This is the latest in this story. This is a continuing story. I'll continue to monitor that and keep you up to date as things are developing. And if you don't want to miss, make sure that you like and subscribe to my channel, and see you next time.